Hello dear students, welcome to the continuation session of Advanced Financial Accounts, that is conversion of partnership firm into a limited company. In the last video session, we have studied the different journal entries which are need to be passed while closing the books of vendor firm. Right? In this session, we are going to study a simple problem of journal entry and also an realization account, that is preparation of ledger account, that is realization account. Now look at the problem which is on your screen. We are preparing the purchase consideration and also we are passing the entries of vendor firm based on the lump sum method. Got the point? So look at the problem here. A, B and C are partners sharing profit in respective ratios which are given, and they also decided to convert their partnership firm into a company. They decided to convert. So now we need to close the books of that firm which is decided. Okay. So they have given a balance sheet, one side a liabilities and other side an asset. Got it? And the next line, the new company took over the assets and liabilities and agreed to pay the purchase price of 32,900. Here he has given directly the purchase price. How much he is paying? That is a lump sum. He is getting paid at 32,900. By allotment of 1,800 equity shares of rupees 10 each and balance in cash. Means how they are paying this amount to that vendor firm? By 1,800 at rupees 10 in a form of equity shares and remaining in the cash. Got the point? And the partners agreed to shares in the profit and sharing ratio. The ratio which they have given on the above line, on that basis they agreed to share the profit or losses. Pass the journal entries in the books of firm and also prepare a ledger account, that is a realization account. Now let us do the problem. I said there are four major steps we need to prepare while converting the firm into a company, and the step one will be the calculation of PC, that is purchase consideration. Okay, so here in the problem he has given a fixed amount of PC, that is 32,900. Look at the question here. The company took over the assets and agreed to pay the purchase price of 32,900. He has given directly the amount of 32,900, that is lump sum method. And the next, we got a PC now. The step 2 is we need to see the discharging of PC. How is paying this purchase consideration amount? Okay, so how is discharging this purchase consideration amount? Right? So on the question you could see, by the allotment of 1,800 equity shares of rupees 10 each and the balance in cash. Okay, so these 32,900 he is distributing as in the form of equity shares, that is 1,800 into 10 each and the remaining balance in cash. So by shares he is distributing 1,800 at rupees 10 each, that is 18,000, and in 32,900 if he is paying 18,000 in shares, the remaining balance will be 14,900, which he is paying in the form of cash. Got the point? So this is step 1, calculation of PC. Step 2, the discharging of PC. Now the step 3, we need to pass the journal entries to close the books of vendor firm. That is passing the journal entry of vendor firm. We will see that. Now let us see the different journal entries which are need to be passed in the books of vendor firm. Okay, so the first entry will be based on the assets taken over or assets transferred. Okay, what is the entry for assets taken over or assets transferred? The entry will be realization account debtor to concerned assets account. Okay, what are the different assets transferred? Those will mention. Okay, look at here in the balance sheet we have buildings, stock, debtors, provision for doubtful debts, cash. Okay, so these are the assets which are been transferred to the, that is a company. Okay, so to building account 11,400, which is given here, stock 10,000, debtors 10,000, and provision for doubtful debts he has given 1,000. So provision for doubtful debts is nothing but a bad debts, but it is not collected. Okay, we will treat it as a liability here. Okay, the provision for doubtful debts is treated as a liability. Okay, then the debtors will be 10,000 and the cash will be 6,000. Okay, so we have mentioned all these items and the realization account total will be 37,400, and the narration will be being assets transferred. Okay, after we transfer assets, same applies to the liabilities. We will transfer the liabilities to the company. So while we transfer the liabilities, what is the entry? Concerned liabilities account debtor to realization account. What are the different liabilities we have in the problem? Look at here. We have creditors at 8,000, and I already said we will consider the provision for doubtful debts as the liabilities, that is a 1,000. Okay, so creditors 8,000, provision for doubtful debts is 1,000. The total realization will be 9,000. So being liabilities transferred. Got the point? So after we transfer assets and liabilities, we will see how much it is a purchase consideration due. Okay, when to know the purchase consideration due or to pass the entry will be purchasing company account debtor to realization account. What's the purchase consideration we have calculated? See, we have know that purchase consideration amount will be 32,900. Okay, so that is we will pass the entry. Purchase company account 32,900 debit to realization account, that is 32,900. Being PC is due. Got the point? So after purchase consideration, we will discharge those purchase consideration. How we have discharged? In the PC problem, we have learned how we have discharged, right? So in the form of shares, we have discharged 18,000. In the form of cash, we have discharged 14,900. Okay, so the entry will be shares account 18,000. How much they are receiving, and the cash is 14,900 debit to purchasing company account 32,900. So total they are receiving PC, they are receiving at 32,900. The narration will be being PC received. Okay, so being PC received. Okay, after this, simultaneously we will prepare the realization account to know the profit or loss. Okay, and those profit or loss transferred to the capital account. Okay, so simultaneously we will prepare the realization account. Look at the problem here. So we are preparing the ledger account, that is realization account, and we have make the format. Okay, what's the first entry we have passed? Realization account debtor to concerned assets account. So realization account is in debit side. Okay, in debit side, okay, in a shorter way I am saying, we will mention all the credit items or a particulars. Okay, that is to building 11,500, to stock 10,000, to debtors 10,000, to cash 6,000. Okay, done. Come to the next entry, that is creditors account debit, provisions for doubtful account debit to realization account. Realization account is in a credit side, so in credit side we will mention the opposite entry. Okay, so that is creditors 8,000, provision for doubtful debts 1,000. Got the point? And the next third entry, purchasing company account debtor to realization account. So where is the realization account? It is in a credit side. Credit side we need to mention as the opposite entry as a purchasing company account, and the amount will be 32,900. So now total it will get a 49,900, that is the credit side is greater. Okay, in that 49,900 we will deduct all this amount, so we will get the profit amount of rupees 4,500, and these 4,500 is discharged based on the ratio which has been given in the problem. Look at here, A, B and C are partners sharing profit in the ratio of 1/2, 1/3 and 1/6. On these ratios we are distributing this profit. Okay, 4,500 into 1/2 for A, and 1/3 for B, and 1/6 for C. Okay, so we'll get 2,250, 1,500 and 7,500, and these profit will be transferred to the capital account. What's the entry while we transfer the profit, these profits into a capital account? The entry will be realization account debtor to concerned, that is the different partners capital account. Okay, who are the partners we have? A's capital and B and C. These are the different partners. We'll transfer these profit into a different partners capital account. Look at here, total we got a 4,500 we have transferred, and these 4,500 we have divided into their ratios, we have shared into their ratios, and we are transferring the in the journal entry. Okay, and the narration will be being profit on realization is transferred. Got the point? So done with the realization account and also the sum of the entry. And after that, check out the balance sheet. In the balance sheet we have also have a loss, because it is in credit side. Look at here, profit and loss account, that is 3,000. This is a loss. Even this loss we need to transfer. To whom? To the partner's capital account. Okay. So when we pass the loss entry to the partner's capital account, the entry will be the different partners capital account debtor to profit and loss account. Okay. So what are the different partners? How much it is? 3000. Even this 3000 amount is divided into based on the ratio 1/2, 1/3, 1/6. Okay. So 3000 into 1/2 will get 1500, 1000 and 500. This is how we have transferred. Got it? And the next entry will be, we will see on what basis, like they have paid the PC in the form of shares and also cash. Okay. When they pay the PC in the form of shares, even that share amount should be distributed to all partners, right? So we'll distribute that share amount to all partners. Okay. How we will distribute? Look at the problem here. There are three partners we have. We have distributed to A, B and C. How much we have shared equity share? How much PC we have paid in the form of equity? That is 18,000. These 18,000 is also distributed to different partners based on their agreed ratio in the problem. Got the point? So 18,000 is distributed in the form of 1/2, 1/3 and 1/6. That is 9,000, 6,000 and 3,000. And the last entry, after we distribute in the form of shares, we need to distribute in the form of cash also. Cash is also remaining. This is the final payment which is making. Okay. How much the cash is remaining? We have 14,900 rupees of cash. And this cash amount is also distributed in the agreed ratio. Okay. To their partner's capital account. That is 9,150, 2,500 and 3,250. The entry will be the partner's capital account debtor to cash account. The total cash amount is 14,900 and it is distributed to the all the partners, that is the three partners on their agreed ratio. The narration will be being final payment made. Got it? So this is a simple problem which we have done related to some of the entries and also related to the realization account simultaneously. Okay. Remember, we have done the assets transferred, we have done with the liabilities transferred, and the next will be a PC due, and the next will be a how much PC they have received, okay, in the form of shares and cash, and the next will be a profit. Okay. That profit, if you want to find, we need to prepare the realization account. We have prepared the realization account and we have got the profit, and those profit is been transferred to the entry. After that, they have mentioned a loss in the balance sheet. Okay. And those loss is also been transferred according to the entry. After that, we are distributing that PC in the form of shares. That is, we are making the payment of that PC in the form of shares and also cash. When we are making the PC in the form of shares, it has to be distributed to all partners. We have distributed based on the ratio. Okay, then the entry will be partners capital account debtor to the equity shares account, because we are making in the form of equity shares. And we are also making the payment in the form of cash. That is also the entry will be partners capital account debtor to cash account. So these are the different entries of a simple problem. Hope you have learned the concept. Thank you for watching the video. Please subscribe to my channel Edu Skills Center for Excellence. Happy bye. Take care.